Hey everyone, I am Pedro Granate. I am one of the co-founders and currently COO of Zharta. And just in a nutshell, Zharta is a lending platform for NFTs. We use them as a collateral. If you want liquidity out of them, you can come to our platform and get an appraisal and get liquidity. And I'm here to talk today about user experience. So the journey at which we came to the concept of Zharta, a couple of features we implemented, why we implemented, and how we make sure we move forward. So I'm going to start by introducing our team. So we are three co-founders. Nuno and Diogo are the CEO and CTO. They have years of experience in crypto and blockchain. I'm the one who doesn't. And I joined the Zharta especially because of this, because I kind of bring the old mentality and an outsider's perspective into the space. And I think that with all of three together, we led to create a couple of very nice features for the product. So basically, I didn't know what an NFT was, and I'm going to recap it for you, kind of to teach the lesson they taught me when they approached me with the concept. So basically, today, if you buy an NFT or you bought an NFT, you see the floor price going up. There are a lot of NFTs who have very high value. But once you need liquidity out of it, you have basically two options. Either you sell the asset and you lose the potential upside on the future, or you hold it and you don't have any liquidity. So the concept of Zharta came in between these two options. So it made sense for us, since an asset has so much value, that it could be used for lending. And so we started developing the concept around this. Once we started doing some research, we immediately found that there were already marketplace solutions. And we tested them out, and we saw a big potential of improvement regarding these marketplaces. So one of the pain points that we saw was the conditions, either for the lenders or the borrowers. So they were really one-sided. Actually, we saw people asking for a loan for more than double than the floor price of the asset. So it was kind of weird situation. And for the lenders who want to get exposure to this market without knowing much the collections and getting into flipping NFTs, they would be basically gambling on the loans. So our journey has into the design and the user experience started in how can we solve these problems? How can we make this experience a bit more streamlined and unique? So yeah, that's exactly the question I just popped up. We thought about first the borrowers. So what do the borrowers want? The borrowers want a fast loan. They want transparent conditions and fair conditions. Then we went to the other side of the equation, because we don't own any liquidity, so we're just providing the means to kind of match borrowers and lenders. And as a lender, what we thought about would be the best experience would be you deposit your funds in Zharta, like a yield farming experience with low risk loans, and you get discount opportunities on the assets that are defaulted. And so based on this, we designed a peer-to-pool model where basically we have a pool of liquidity providers who then provide this liquidity to borrowers who come. But there are actually a couple of pieces we need to develop to ensure this. So there's the pricing. So we developed our own pricing algorithm for collections, which makes sure that the NFTs are priced correctly and fairly between the available assets on these collections and all the other collections. We have risk management strategies implemented. So we have underwriting algorithms that serve to protect our lenders and make sure that in case of black swan events and also in case of default, the lenders are not penalized. And this is the starting point for a truly unique user-centric experience. So now it's all done. The concept is created, so it's simple, but this is just the theory. So now the next step was to implement this in a very simplistic way, where you can just arrive to our platform, and within a few clicks, you can either be a borrower or a lender. And so we kind of designed, I'm going to showcase here our platform a bit in format of presentation. So this is actually our land screen for lenders. So if you are a lender and you want to deposit, you basically arrive to this screen, and you can see that the experience and the UI is very simple. So you have a deposit button, you choose 3 things, and that's it. You don't have to start navigating, you don't have to choose specific collection, you don't have to be a savvy investor to get exposure to NFTs. On the other side, we have the borrowers. So the borrowing screen, you come to our platform, you connect your wallet, it automatically scans the wallet and shows there all your NFTs, and all you need to do is to slide the amount of currency you desire to get the loan, and you put request loan, and that's it. So very basic experience, very simple, very focused on real-time loans and getting the loan as fast as you can. But one of the pain points after here, and this was especially difficult for me to figure out. So usually in other protocols, you reach this stage and you go into approval stages with MetaMask, which you don't know what you are approving. So basically what we did was to create kind of a guide, exactly what is going to happen in interaction between users and MetaMask. And we designed this feature like a model feature where it can guide you through all the process of approving the collections, creating the loan, validating the loan, and it kind of shows you what's going on the background and what does the user need to do to interact. And this was one of the features that most of the non-crypto savvy people actually liked most, because they felt a bit safer in what they were doing. And that's it, right? There is missing actually one very important part. So after all this is settled, how do we ensure this is actually what the users want? And this is one of the main points I think when designing a product that I wanted to also to showcase here is the importance of how you build in Web3. And so we implemented a couple of things. So the first thing we did was to create a community. We basically launched our Discord and Twitter server and started engaging with our communities. And this is one of the truly good experiences with building in Web3, is that you can build with your users, for your users, collect feedback and implement loops of bug fixing and feature integration that are very short and very user-oriented. But for this, you need to get feedback. So we also implemented a couple of feedback reward systems. So if you want to test our platform, you have to fill a very short questionnaire to kind of know what are you looking for in a lending platform. Then after you test it, you fill out and give us information and feedback, you actually get a shout out in Twitter. We promote you to a special Discord membership, and this kind of makes users engaged to know more about the platform, to stay within the project. So this is one of the things we did, was to reward the user feedback and implement a system that's healthy to collect this. The third part is processing this feedback. So we have a bi-weekly session with complete team where we go through all the Discord, all the Telegram, all the DMs of everyone. We try to put it in groups and figure out exactly what is behind that before we implement a feature. And last but not the least, implement, test, iterate. So we are on this stage. So we just have launched our alpha version. We have, I don't know if we have 100 users yet, but we are close to it, testing and giving feedback in our platform. And we are every day or every two to 3 days, there is a new update on the platform, and we directly see its impact. We onboard users each time there is a major update, so we don't get all the same feedback. We get it a bit separately, and we continue testing. And to finish this, I want you guys to take this with a grain of salt. So one thing is to listen to feedback and implement features. But if you just do that, it becomes slow. You are reacting and not proactively thinking about implementing features. So the last idea that I want you guys to have is take the feedback with a grain of salt. And we are in Zharta, we are thinking a bit ahead. We are thinking of the user is saying he needs the button here, but what does it mean? We are going inside the minds of our users and designing the features that they really need and show them before they know they need it. And this is actually what it's enabling us to plan the next features, plan the next iteration on the process, so that our platform really becomes unique in terms of user experience, and we can create an impact in the community of Web3 in NFT lending. So we are building this all with love and care, and join us. That's it. I think this was very short, but we can go to a couple of questions if you guys have. Yeah,
so
it's working. Thank you.
Question is quite simple. How many active users do you have on your platform, and how do you see future in lending? Do you think that this PFP wave will last forever, and how do you generally see it in close future, let's put it like 1 year, 6 months?
So the first question, we actually have a couple of active users. So since we are now in a testing stage, we are onboarding every day like 20 to 30 users. And out of these, I would say 3 to 5 test the platform, give feedback, and then that's it. So I would not call them active users. They were active for the purpose that we did this experiment with. But it kind of goes every day like 3 to 5 users using the platform. Sometimes they are the same users because we implemented a new feature and we say, please check this out, how is it going? And we are not live yet, so this is something we will figure out in the future. Regarding the future of lending, so this is a bit of a personal opinion on the NFT market. So right now it's very focused on collectibles, and it's a bit inflated, I would say, with this hype, I think it's the correct word. And I think for these 6 months, 1 year, it's going to stay like this. So we are going to focus on collectibles first, and moving to other assets like metaverse items, GameFi items. So this is, I think, where it's going to head in the next year or so. After this, I think it's where the challenge comes. So we see that NFTs still are lagging a bit or staying behind in bringing utility and merging different kinds of worlds, be it games with metaverse, being art with games. So I think it would evolve into that direction. And also to a couple of financial primitives that we have today, like and the digital twins here play a very big role. So I think we're going to have more utility NFTs, which is good for our platform as it is right now. And this new part of the digital twins that I truly believe that in a couple of years, your stocks are going to be NFT, your house is going to be an NFT. So, and this enables us to kind of bridge like the old traditional finance system with the new. And this is what we are heading in the future.
Thanks. Thanks. Okay, thanks. Yeah, you mentioned the future. I didn't want to go that far, but in terms of like, let's put it like that, because you mentioned housing, for example, and I have NFT that's contracted to my house. Like, how are you going to prevent of people like, I don't know how to even put this question. like when NFTs get stolen, like I assume this is something that like slowly going to like stop. But in case that I get stolen, like my contract for my house, how are you gonna prevent of it from getting it like landed and borrowed from your site?
So this is actually a good question, and we can transpose it to of today. So today we already see that there are some blue chip assets that are being stolen and copied and trade washed. And so what we are doing, especially with this last part, is trade washing and pumping artificial numbers into the values of NFTs, is we are filtering this with our algorithm of AI pricing. So we have some built-in features to kind of detect wallet transactions and see if the wallet, the asset is legit or if is it fake, or at least its value. One thing we are working on at the moment is to detect also this kind of frauds, these schemes where people got scammed and lose the NFTs. So today there's nothing we can do about it, but we are thinking of how, if we are going to block the certain wallets, and this is something we are actually discussing at the moment in Zharta.
What blockchain do you use currently for that? Is it just Ethereum right now, or any other blockchains that you use right now?
So right now we are focused on Ethereum, since it's where the most blue chip assets are, but we have a couple of ideas into moving into other chains, like layer 2 chains and other layer 1 chains. And we are also, this is for the long term, figuring out the bridging NFTs. And so we can enable this sort of cross lending. So you have an NFT in Ethereum, but you want to a loan in meme. So you kind of have to bridge to complete the full circle. And this is actually something we are working on right now.
I think lending digital value is a topic. It doesn't have to be a PFP image, but digital value is a thing.
Yeah, truly. Thank you.
So you mentioned that you chose the pool-to-peer model for your lending. I was curious if you could maybe elaborate a little bit on, first of all, why you chose that model. Obviously, like probably the other model would be just basic peer-to-peer lending. So can you maybe tell me a little bit why you chose that model and what is important for you as a project in pool-to-peer lending?
So the peer-to-pool model comes from the necessity of having immediate lending. So we kind of figure out that with peer-to-peer, you'd have to make an offer. The offer would have to suit the user needs. Sometimes the user needs would be very crazy. So there would be this part of negotiating the terms, which we felt that it would create a lag in the need for a loan. Of course, this could be solved with implementation of notification features, chat features, and also with limited loans. So like you could fix the conditions beforehand, and you would just go there and as a lender and approve those conditions and give liquidity to the people. But then you would need to have the exact amount of liquidity. And so we thought everything would just be easier and faster if we put just everything in the same place. So even if you have, let's say, 5 ETH and you want to be part of a lender, and you want to lend your money, your tokens, basically you can do it. It removes the barriers to need to match exactly the same amount that is requested, and it enables you to get, as a lender, to get exposure to this market without figuring out which lends or which assets match your profile, if the asset is being well validated or not. So this was the reasoning behind the peer-to-pool model. What was your second question? I forgot. Meanwhile,
I don't think the second question necessarily is that important right now, but I assume, if I understand you correctly, then you feel that it's better for user experience, and you think that this pool-to-peer is the way to go in the general market.
Yeah, and this it has to do with the last point that I show here, which is to get to know our users. And today we feel that our users that have NFTs, they kind of just want to grab the liquidity to to grab opportunities of investments or winning airdrops, and this is very short in time. So if you can do it automatically, our platform becomes a part of something bigger, which is the building blocks of the DeFi. So, and this is kind of what we aim for in the long. Your question was what do we aim to be in the long run? Now I remember. And this is kind of where we're headed. So by enabling these automatic loans and with pre-approved conditions that are fair for the lenders and the borrowers, this is something that we are fine-tuning, but this is the overall premise. We can put Zharta as a building block of any DeFi strategy, any investment strategy in crypto space.
Who assumes liability in case of a crash? So, for example, you know, over the past weeks we saw the UST situation, and that clearly had an effect. So, if I have an ape and I put it into the protocol and it goes into the pool, and then I receive the financing at, you know, whatever value the algorithm deems appropriate for the peer-to-lender situation. The market crashes, I lose half the value of my ape in that situation. Is there like a scale for the loan, or like how does that work? Do I just assume the entire liability of my asset in that point?
So currently there are two things that we have observed. So directly answering to your question, yes, has in case of a crash, so let me just rephrase it. So right now, our loans have fixed maturity. So it's a loan with the most duration of 1 month. And so each month we evaluate not each month, but every time a loan closes, we evaluate the conditions. Every time we open it, we predict it how it will be in 1 month. In case the crash happens, we are kind of protected with this time frame. So of course it can happen in 1 week, and that way it could, the liabilities could pass to the lenders in this case. So we would see that if the market crashes, the borrowers would not pay their loans, there would be a high default rate, the lenders would lose potentially the upside, and there would be a lot of defaulted assets. So what we have thought of in this situation was okay, you still have the asset, you still have an ape, and the second part of your question, or at least my reasoning to answer your question, is during this market crash, we saw that all the cryptos have fallen 30, 40, 50%. But the floor price or the value of the asset in the native token has not changed so much. And so this is something, right now we are focusing on the loans on the native token. So it's in Ethereum, you get Ether. And so in case of a market crash in Ether, so you still have to pay your Ether. And it kind of all revolves around the Ether price, and there is less fluctuations in case of a black swan. But it can happen. So imagine Bored Apes just lose everything and they are scam and rug pull from one moment to the other. And this would mean that the assets lose its value. So one other thing that we have implemented right now is to kind of look at the values of the assets that are being collateralized and incentivize people to either put more of that collection or less of that collection by changing the rates, by changing the conditions at which they get the loan. Okay, guys? Thank you very much, I think.